Right, I'm live. I'm live. I'm live on YouTube. I'm live. I'm live. I'm live, guys. Let's quickly join. Right. If you can hear me, just type I can hear you. I can hear you. Yeah, for the sake of those that want to have it recorded. Right. So, okay, great. You can see me, can hear me. All right. Who else can see me and can hear me? I want to share my screen now, so confirm if you can also see my screen. All right, great. Okay, cool. All right. So very quickly, so let's get into the business of the day. So let me delete every single thing I have here on bold, right? And let me start with what I want to share with you guys. So I'm bringing it back to the basics. All right. I sent us something in my, okay, I sent something to us, right? This, I'm going to pin it. So I said that you would need to have your patterns in your mind before you come to the charts. So what I did is I'm going to always be writing. Once I have a pattern in my head, I'm going to write them out, draw them out so I can have them pasted on my wall. So I see them. So the more I see them, as the scripture says, as we behold, right? So when you behold, you become. It's a natural principle of life. So I always want to see my ABC rule, my impulsive, my corrective wave, my 0, 1, 2, 3, right? Always before me. It gives me that. So I'm going to start by talking to us on the storyline and the waves. Okay, back to the basics. Back to the basics. All right, storyline and waves. So every single time, as a general, what's it called now? General concepts. You're asking yourself, where is price coming from? Where is price coming from? Okay, I'm asking myself, where is price currently at? Where is price currently at? Then lastly, I'm asking myself, where is price heading to? Where is price heading to? I want to make trading to be so simplified and easy because the way I'm taking this, right, is to ensure that even the teens, our teenagers and the kids can understand how to approach the market. So bringing it in this format, you can explain and teach this to anybody, right? Bringing it to a format of first, let's leave the chat, let's talk theory, let's talk mind to mind, like say bro to bro, right? What we are simply doing is asking ourselves these three questions. Where is price coming from? Where is price currently at? And where is price heading to? So this one part, put in your left brain, put it like this. Okay, put it aside. Then one other thing again you should always remind yourself of is the wave. Okay, the wave, and there can only be two waves in the market, whether it's external or internal. Let's first talk about the wave. There can be only two waves in the market, and I have one is impulsive, impulsive, and what's the next one? You can type the next one on the chat box. There can only be two waves in the market. You can type the next wave in the on the chat box. Type the next wave in the chat box. We have impulsive wave and what? I'm waiting, I'm waiting, I'm waiting. Pullback. Okay. Pullback is correct, but I want a particular word, a particular term. I want, yeah, corrective. Yeah, retracement. Corrective is what I want to hear. Yeah, correct. Pullback is correct, but what I want to hear is corrective. Okay, corrective. Now, so what it means is that for every time the market is trending, it's always printing out an impulsive wave and a corrective wave. An impulsive wave. So your question is, where is price currently at? So is price currently at the impulsive wave or at the corrective wave? Every single time. Is price currently at the impulsive wave or at the corrective wave? And one thing you should know that this is relative. It cannot be. Next question is that is it external impulsive, internal impulsive, external corrective, or internal corrective? So having gotten this, so the next question is internal or external. Okay, so that's the next point of question now you're asking yourself. So the next question now is external or internal. That's the next question now. External or what? Internal. Internal. Okay. Now let me draw a wave, for example. This is my wave. Bam, bam, bam. Remember, this first wave is just giving you directional bias. You can't say this is you can't say this is still buying yet until you see a pullback, right? Then let's just use for example this one particularly. So from 0 to 1 is what? Impulsive wave. From 1 to 2 is corrective wave. Then from 2 to 3 is what? Impulsive. So for example, if price is currently here, your question of number 2 is what? We are currently at what? Impulsive wave. And you know that for you to buy, price will have to correct into a location of discount or equilibrium. So you know at the back of your mind that you are waiting for a correction. Now it's now left for you. I always say that the waiting period of a day trader is what? Who can complete that statement? The waiting period of a day trader is what? Whilst day traders are waiting for price to correct to this demand zone, what is the waiting period of a day trader? What is the waiting period of a day trader? Let me know those are who are paying attention to my classes. The waiting period of a day trader is equals to what? The waiting period of a day trader or a swing trader is equal to what? The waiting period or in this case now the corrective. Okay, buying period. You don't use buying period. Use is the trade opportunity, because in that case now we are selling for scalpers because we are pulling back to a demand zone. So it's not buying yet. So is this trading opportunity or the trading period for a scalper. So the waiting period of a day trader or a swing trader is the trading opportunity for a scalper. So whilst day traders are waiting for a corrective move into the demand zone, exactly, advantage for scalpers to sell and make cool money. You get the point now? So let's come back to the chart. So this is it. We said 0 to 1 is impulsive, 1 to 2 is corrective, 3 to 4 is what? Impulsive. Day traders are waiting patiently patience, whereas scalpers are looking for advantage of seeing a change of character here and sell to this guy. Then smart scalpers will now take the buy and and they buy here. You see now? So that's the wisdom. So if you but you have to have that plan on the onset that you are scalping this sell and you are taking now the buy to now this what this real buy side liquidity. So we are taking our profit here, first profit here. Yeah, exactly. So I want to bring it back to the basics. So we have talked about our storyline. So in this case now, let's answer the question one. Where is price coming from? Price is coming from what? A zero, one, two, three direction. So this one answers what direction? This first one, this first one gives us what? Direction. DircitIan. And direction is equals to what? 0, 1, 2, 3. So where is price coming from? Price is coming from 0, 1, 2, 3. Bam. This one no dey change. Where is price currently at? So in this case now, price could be anywhere. For in this case now, so this number 2 is saying that when you come to the chart like this background, where is price currently at? So just bring yourself to your impulse. And so the question is price currently at the impulse? You will know. For example, let me come to my gold now. Look at gold. Okay, gold is, so the question now is, where is price currently at? We have to first answer the question of where is price coming from. Okay, look at it. 0, 1, 2, 3. So that's why I said that this one might just be first. You can't say this is a buy, valid buy until we have a pullback. Now currently price is at impulse. Yes or yes? Currently, from this current price action, price is currently at what? Impulse. That means we have broken out. We have broken out of this shift. Impulse. After impulse, what do we expect? Correction. After correction, what do we expect? Impulse if it is continue going up. Do we see now? So if we say that this one is our real change of character, that means what we'll be expecting is, let me change this to path, a corrective move, an impulsive move. Corrective move continues like that. Impulsive move, it continues. Okay, but if this guy is not a change of character, what will now happen is that you will now see a break of structure here. So two things will happen now. We are either going to break structure up or we break structure down. So we have boxed price now. Current market price on gold. We have boxed price now. This is our current range. Are we together? On 15 minutes, our current range. So price will either break, price can't do two things aside from this again. The no born away. I say price one craze. We can't change structure, we can't change character two times and now go against us, except if price don't mad finish. Right? It's the rare case. Once we see at least two change of characters, most likely it's a change of trend. Most likely. So we have seen one change here, we are seeing another one here again. Once we have seen price breaks out of this one, no. It's most likely already heading up. Okay? So, but when we see that price comes and breaks this guy out, boom. What do we now want to see? A corrective wave. So now we have now seen what? An impulsive wave here. So when price breaks structure here, that means that price is at what? That's the impulsive. What do you now do? Wait for what? The corrective to now continue selling. Is that clear? Yeah, I'm seeing your screen in infinite frames. I don't understand. Yeah, what I just said now, is it clear? Does it make sense? Corrective and impulsive mindsets. Type on chat box, everybody. Type, type, type. Corrective, impulsive, and corrective mindsets. Impulsive and corrective mindsets. Impulsive and corrective mindsets. Impulsive, having, I've given the topic. Having an impulsive and corrective mindset. Ah! Webinar topic. Spec. Mo will say, oh yeah, Joseph. Webinar topic. Having an impulsive and corrective mindset as a trader. ah, Mo don't teach us bad thing. How to turn everything to topic as well. Having an impulsive and corrective mindset. yeah, yeah. Yes, and it's true. It makes sense now. Have an impulsive and corrective as spec. Milk is I feel Jerry. I used to be my ways. As a trader, you need to have an impulsive and corrective mindset. Very, very true. You won't stress yourself. When you come to the chart, the question is where is market at? Impulsive or corrective? Internal or external? So sometimes price might be so when price has given you a very internal structure like this, for example, now we are internal bullish, right? So inside this pullback now, we might be forming impulsive corrective, impulsive corrective, no wahala. When you come to the chart, first recognize that this is an external impulsive, right? So you are now expecting to see internal impulsive and correction. Impulsive and correction. So you know that you are selling downwards, selling towards what to come here. So now you are expecting to have internal impulsive and corrective. Oh, who is getting what I'm saying? What we have here is internal impulsive and corrective. This is external impulsive, corrective, impulsive, external. That's all. So the market is just a series of impulse and correction. The market is a series of impulse and correction. The market is a series of impulse and correction. That's a quotable quote. The market, Mr. Albert. the market is a series. I've missed you guys. Oh, chai. I don't miss you now. Die. the market is a series of impulse and correction. The market is a series of impulse and correction. The market is a series of impulse and correction. So that's the secret I want to share with us this night. The impulsive and corrective secrets. Okay? Right? The impulsive and corrective secrets. So one other secret again, I want to share with us that I discovered. Right? So yeah. Sorry, let me close my door. Okay, yeah, the market is a series of impulse and correction. Yeah, 100. Okay, so one of the other thing again I want to share with us. When you have, let me come to the charts. Let me come to the charts. When you have a break of structure like this, boom. Okay, we all know that after a break of structure, we have a range. Okay, we all know that, right? So I say that a break of structure will create what? A range. Simple. Yeah. A break of structure will create a range. We all know that, right? And this is the range it creates. Okay, we don't know that. Now we only have interest to buy where we are either at equilibrium or at discounts. That's another thing to note. I'm just giving us a duration. We only have business to buy when price is either at what equilibrium or price now comes to a discounted price. Okay. Now is this discount price I want us to pay attention to. When price is pulling to discount price, it's not new for some of us. It's not new, right? It's not new, but it's very important we note it. It's what is called optimal trade entry in our discount zone. This is very, very important. Okay, it's a secret. It's what is called optimal trade. We call it OTE. Okay, it's called optimal trade entry in the discount zone. Okay, and it's usually found in between 61.8 and 78.6 Fibonacci retracements. I will take it step by step. Optimal trade entry is usually found at where? Usually found at Fibonacci 61.8% and what 71.86 or 79%, anyone. Okay. So in between this Fibonacci adjustment, in between, so the middle point, okay, usually call that place optimal trade entry. So what we are just expecting is price pulling back. So inside, because in this discount zone, we have so many locations, we have different other blocks, we have fair value gaps, we have so many different locations. So for you to say yourself the stress of which location make I use. All right. When it gets so messy, one of the ways is one, having your optimal trade entry at Fibonacci retracement levels. Okay. Now watch. I will draw my Fibonacci from my swing low to swing high. Once you have break of structure, just be happy. Wait for your retracement into your discount zone and your optimal trade entry. So let me do that now. So my Fibonacci from here, from low to high. Okay. I have 61.8, I have 71%, I have 79%. So let me change this to the normal 71.86. Let me change to the normal 71.86 that we know. 7186. Oh, okay. Let me leave that 79%. Let me leave it there. Because it's approximately 79%. So let me just leave it there. This is perfect. Okay. So your optimal trade entry would be 71 61.8 and what 79% in between. So automatically your 71% Fibonacci. You can see that you can see why 71% is always a golden ratio for things like gold, right? That's why I use 71%. So I'm just giving you the background. So that 71% you are seeing here is actually the optimal trade entry of our Fibonacci retracements. That's why ARA, okay, uses 71% as its entry. So what ARA does, who knows ARA? How many of us know ARA? My brother from another mother. How many of us know ARA? If you know ARA, give a shout out to ARA. ARA on YouTube. Okay? Yeah, you do. Great. So exactly. So what ARA does is ARA waits for a pullback into 71% and it puts his buy limit and stop loss at 100%, take profit at 0%. Simple. So it does optimal trade entry at 71%. So 71% is actually the optimal trade entry. That's the middle line between 61.8 and 79% is 71. All right. Yeah, 4 hour guy. Yes, 4 hour guy. Okay, so that's just the idea between this automatic entry. Okay, so I see some traders put their stop loss below 79% for a cool tight stop loss. But sometimes you might not be lucky. You have to ensure that if you are putting your stop loss below 79%, ensure that there is an order block here that's giving you a protective low here for you to, because normally this might just take you out and come here and go again. So, but the only case where you can put your stop loss at 79% is when you have seen on lower time frame that you have protective lows here, internal structure. Let me send a video to you to explain that on the group. I'll send a video now to explain what I just said. Okay. Yeah. Good. So did we get optimal trade entry? I will explain what I wrote as the notes in the video. I will explain what I wrote in the notes. So below 50% is our discount zone. Yes or yes? Okay. Below 50% is our discount zone, right? And at that below 50% at discount zone, we have, like I said, we have different locations. So let me take off. Can I take off optimal trade entry now? Can I take off optimal trade entry now? Yes. Yeah, yeah, yeah. So the guy is, I don't know, you know this guy is like this. I used to do comedy and do like this. So this guy, it looks like him, right? That's one. And whenever he finishes his trading, now does like this. So very funny guy, and he has great content. Yeah, Kabi, yeah, exactly, Kabi guy. Yeah, I love the way he's. Although people are very funny in the comment section. They are like saying that that I used to do only back test, replay, show us live chat. Although they are correct, but this guy is making sense even from the replay. All right, you can say that this guy know what he's doing even from the replay. I agree that he is showing us replay. It's not live market. But from the replay, the guy is giving us, is educating us. For me, I'm learning, like it's making sense to me. I can relate to the ritual. So it is foolish people, foolish traders that will be attacking. Someone says something, and I want you guys to write this thing down. Don't attack what you want to attract. Don't attack what you want to attract. That means you see somebody making money from trading, even if the person is even making, even if it is not even real account, even if it's demo. But the question is, do you want to attract this kind of result in your life? If yes, then don't attack the person. If someone comes to the internet and is doing a replay or a back test of how a trade is playing out, but the person is making sense, the question is, do you want this kind of example to reflect in your trading account or your trading life trading? If yes, celebrate the person, because once you attack that, he's doing back testing, he's not showing live account, you are not, you will not attract that kind of result into your life. So I was just laughing at those that are attacking this guy that saying that you are just giving us replay, show us live market, show us live market. I pity for you. Market is, they don't understand. They should come to ProFX. We tell them that market is about similarities, patterns, and trends. For the fact that market, can we all hear me? Are we together? Are we together? Are we together, guys? Are we together? Yeah. For the fact that market did what it did on a back test or on a replay, it's a sign that market will do the same thing in a live market. Yes or yes? For the fact that market did what it did on a replay or back test. In fact, once a trader comes up to give me a replay, I am happy. Like, okay, this guy don't give me trade secrets. All I want to see is just, in fact, just teach me back test. Don't even teach me real market. Teach me back testing. I'll just go and study enough and come to the live chat. I will now have to trust what I've seen from backtest, putting a risk in case it does not work out. That's the market. Similarities, patterns, and trend. That's why we say do at least 100 backtesting trading days. Why? So that you have enough examples in your market. So yeah, I really enjoy this guy. Like, I've learned so much. I just discovered him today when I was scrolling through my TikTok, and I really love this content. It makes a lot of sense. I learned a lot. I could relate. All right. So I'm going to show us. So I'm clear about the optimal trade entry. Now, below your discount, so let me screen record this and send to the group. I want to share something with us now. Okay. So below our equilibrium, that's the 50%, you're going to have different POIs. Okay. You're going to have our fair value gap below. You're going to have other blocks below. So I don't want you to be confused. Okay. Other block is your refined demand and supply. So let me just stick with other block. Then we are going to have other side breaker blocks, which we call which if you don't know what breaker block is, signify. Breaker block is the opposite of other block. If you don't know what breaker block is, signify. If you don't know what breaker block is, signify. BB, breaker block. Yeah. Price will repeat its actions. Breaker block is simply an order block that broke. An order block that did not hold. Okay. A demand and supply that did not hold. A failed order block. Yeah, Melkis got it. A failed order block. So, for example, you expect a demand, okay, a demand zone or a order block to hold while it's coming down, but it broke it, it failed, it destroyed it. Yes, invalidated order block. Yes, once it broke it, that is a breaker block. Then we expect price to pull back. So if price, yeah, like break and retest, you can see, yeah. We call it also flip zone for those that trade retail concepts. When your support turn resistance, that's simple. Resistance turn support or support turn resistance. Simple as that. So you will notice that as price is pulling, as price pulls, gave us corrective wave, right? And it gives us what? Impulsive wave. As price is pulling up, it will be creating demand zones, demand zones, demand zones, demand zones, right? So as far as pulling back, you'll be having some demand zone that you expect to hold, but we fail. So let me give an example. Let me see if there's an example on the chat here. La 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 la. Okay, good. So look at this very carefully. I'll give this as an example in two ways. All right. Now, this, for example, now if you are buying now, this is a demand zone that we expect to hold, right? But it broke. It did not hold. You can see, boom, is a failed order block, right? Is a failed what order block. So we call it breaker block. Simple as that. In the future, we expect that other block to hold. to become something else. So now it can be a point of location too, but just an example. This can turn over to respect. You can say that price respected it. Price respected this particular place here. So this buy you are seeing here has to also do with this location you have from here, right? So it failed here, extended there, and kind of respected here, right? That's just an example. So back to our charts. Where is my guy again? Okay, this is where I am. This is where I am. Okay, looking very small. So when price is pulling back into our discount zone, be careful of the things you see. Now, your fair value gap that you want to make, that you want to recognize here, are the ones that first happen below your 50%. Don't take serious any fair value gap that is above 50%. First of all, you don't even need it. So the fair value gaps that you will take seriously. So let me start with fair value gap. The fair value gaps that you will take seriously are the ones that happen, of course, below 50%. All right. Then if an order block will not hold, that video I sent to you, it was a video of an order block that failed to held, but the fair value gap above was used. So he answered the question of why. Someone asked a question in that comment that why did price not come to the other block? Why did price use the fair value gap and not the other block? So I want to show you how to be able to be flexible to know when will other block be used or fair value gap be used, because sometimes, okay, before I will say just choose one. Either you choose fair value gap or you choose other block or you choose, but now I've gone to the point where I now know which of them will hold per time, so that I will not just be say, okay, I want to just guess to just use one. So at least I can now tell which will hold at when, at what point. So example, when you have an order block and a fair value gap in your discount zone, okay, how do you know if the other block will not be held? If you watch that video very well, there was a breaker block already at this point. Look at it very carefully. There was a breaker block here, okay, and let me do a pattern. Let me do a part to show us what I'm talking about. Okay, let me do this part. Watch this part carefully. Watch this part carefully. Watch this part carefully. There was, look at how the market was coming before, coming down like this, okay, like this, right? And we add this, boom. Let me confirm. Yeah. So we had this structure, right? Now there was a failed supply zone here because we are selling here, Abi. We have been selling all the way here. We are expecting a supply zone to hold there, right? So there was a failed what? Supply zone. Boom. That is a breaker block. Extend it. At that same point, we had a fair value gap at this same location. And there was now an other block where below, very clear. So that other block will not, go reach. Other block no go reach, no go come there because there is already a valid position here. A breaker block plus a fair value gap is already sitting here. So price would rather use the fair value gap and buy, not coming to the other block. Do you understand what I just said here? Price would rather use this fair value gap. Why? Because there's already a breaker block, a failed supply, so a resistance that turned to support. You can put it that way already. So that one is a valid position rather than wait for price to come to other block. So don't waste your time. Price won't come here. Is that clear? Best. Yeah, here you're saying yes. Oh, gladness. Wow. Wow, 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 wow. I have August visitor in my name. I missed. Wow. Gladness say yes. Okay. 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 Yeah. Interesting. Interesting. Yeah, yeah, yeah. Very interesting. Very interesting. Very interesting. It was like my eye open. So you know what to use at what point in time. Yeah. So pay attention to this kind of things. So you have your normal equilibrium, price is coming to your discount zone. So below your discount zone, you have other block, you have fair value gap. So which one? Pay attention to. If you have a breaker block and you have a fair value gap, best believe that is your location. That fair value gap is now your location. Don't expect price to come to your other block. Fair value gap is your. But when there's no fair value gap there, okay, here you can expect price to come to your, of course, other block. So when they are balanced, there's no imbalance, but there are lots of balances. Of course, price will just use the what other block or demand zone, right? That's clear, right? So what should I name this as? Breaker block. Let me see. Yeah. So those are the two secrets I want to share with us. One secret is what the impulsive and corrective mindset. Then second one is how to know which of which. So you can now, so same thing applies to a sell. So this is a buy, abi. So for a sell too, that means you must have been having markets going up, right? Right. So we have a failed, yeah, same thing. So we have a failed, let me see. Yeah, sell, buy, sell. Good. So demand we suppose hold, no hold. Yeah, supply we suppose hold, no hold. So this demand failed to hold, right? And it broke through. As price is pulling back, at that point we add that failed, of course, what you call your support and resistance. At that point we had that failed, that breaker block. If we have a fair value gap there, best believe that fair value gap is what will be your point of interest. So price will necessarily come back to the other block. And what we saw from that video was that price was respecting that same FVG was where the optimal trade entry was. If you do your Fibonacci retracement from your low to your high, that place is usually, this guy, I don't know how this guy is to do it. That place is usually, you can see is even in TSF, you can see 71%. That's where it is. Right? So your buy is at 71%. In this case now, in this case, your stop loss will not be at 100%. It's at 79%. This is how to maximize your stop loss. There is no, you don't have business putting your stop loss here again. No, because that's useless. This is now your protective, because now your breaker block is now your protective low. Who get what I'm trying to say? That's your protective low. You don't expect price to go below that, right? That's your low as breaker block is protective. So now you can use to put your stop loss at 79%, not at 100%, right? Then TP at your 0%, and you're good to go. Is that clear? Yeah. So let me take questions. Yeah. So I'm gonna announce my My five wiser traders. I have them. I have them already. I have my five wiser traders for January. I'm gonna send them to the group. Where did I put them? So I want question. Ask question. We are wrapping up for January batch already. Okay. Okay. Stop loss. Stop loss is at 79%. 79% Fibonacci. You know, every Fibonacci has their line. So just like we have 100%, we have 79%, we have 71%. So your stop loss is at the 79%. That's where, because those lines too, they are also key levels. All these your line you are seeing, they're not just ordinary line. No. They are key levels where price respect. So once price has your optimal trade entry, all right, 79% is your stop loss. Yeah, I'm not 100% again. That clear? Where is that traders? Where is the traders? Where are you? Um, 4 hours. Yeah, the higher the time frame, the better. Not you can have it on any time frame. It's fractal, but the higher the time frame, the better. One thing about structure is that any time frame you are, anything we are doing, anything we are doing here in form of all these waves and stuffs, it is relative. All right, higher time frame is better. So this move on the 4 hour time frame or this time frame, you have a more valid setup, right? Lower time frame, of course, you have manipulations. So there is high chance that your 79% will be manipulated in lower time frame. Let me also note that. All right, there's a high chance that your 79% will be manipulated as liquidity because you understand what liquidity is. But on 4 hour time frame, your 79% will rarely be manipulated for the buy to continue. Is that clear? Yeah, yeah, deep stuff. Thank you. All right, so I'm announcing my series done. Thank you. I'm announcing my five wiser traders for the month of January. So let's give drum rolls for my first on the list. Melchizo. Number one, Melchis of the Most High. Melchis. Give it up for Melchis. Give it up for Melchis. Official wiser trader. Official wiser trader. Right? These guys are the ones that will be sitting on the trading floor by August, by God's grace, by August, when I have my full 25 trading team, we're going to have our physical trading floor fire. Physical trading floor. We're going to be sitting trading live. That's the vision, that's the plan. To have a trading floor. So 25, that's the goal for this year, right? 25 trading force. So we have make is yeah. Right. So the second person on the list, I'm not sure he's on the call now, is our silver trader. Right. He has been with me right from the days. The guy that trades silver. Right. So and what marvels me, well, let's say marvel, is a pastor. Yeah, he's a young pastor, young minister. So I'll call him by his, if he's listening to me or watching the recording, Pastor Madara, right, is the second wiser trader, right? Yeah, sure. And these are the people that have shown result in terms of live accounts, demo account assignment. They have traded accounts. I've seen their progress. He's the one that currently that did. If you can remember, the guy that did $4,000 profit on who can remember that stuff we sent, right? He trades silver. He's a silver trader on the group, and yeah, he's doing well for himself, right? So yeah, number three on the list. Let's give it up for Speckle. Speckle. Speckles. Speck in the building. Yeah. Yeah, Speck is my third wiser trader in the building. Yeah, Speck is a guy. Yeah, yeah. Spec. You do well. Yeah, Spec is the third wiser trader. Official. Okay, straight up. Our next wiser trader is David. David. Is David here? Is David here? Is David here? I'm not sure David's on the call. I'm not sure David is here. Is David here? David, my young. I think it's David is 19 or 20. I think just 20. I think it's 20. Yeah, it's the kind of person that gives me that teenage vibe, right? Is Miss Greatness here on the call? I'm not sure Greatness is here. Greatness, King David. Okay, okay. David is in school currently, so maybe he's having exams or stuff or in section. But on the group, just celebrate them on the group when you have, right? So now it's five I have, but this five, our US oil, yeah, exactly, US oil trader. It's five I have, but five I have two traders that I have that six five, so I have six instead of five, right? So the fifth person is Samuel. Yeah, Samuel don't show me say, yeah, yeah, Samuel. That's Samuel in Otta. Samuel. I don't know what I should call you now. I think we have two Samuel in the house, so the other Samuel is not even active. Yeah, Andy. Yeah. Andy. Which one is Samuel Olugade? Are you still Samuel Andy? I don't know. Which one is this Samuel Olugade is which one? Are you the same? Are you the same Andy? Okay, yeah, the same. Okay. Great. Okay, good. Yeah. Yeah, I give it up to you. I give it up to you. Then the person that's contending for that fifth is my almighty greatness. Greatness, Baba. My 14-year-old trader. Greatness is 14-year-old for crying out loud. 14-year-old. He's not even up to 15 yet. I'm not sure it's 15 yet. I'm not sure it's 15 yet. 14. From the UK. He's in the UK currently. Still in school. Well, I think it's 14 or 15. Either of the two. 14 or 15. Yeah. Okay, so these are my first sets of wiser traders. My first sets. Of course, these are not all. These are just the first set. So we have other sets coming up, right? So the next five will be selected during the February batch. So I know we all are putting in the work. Yeah, greatness. Yeah. I cite you, my brother. I cite you. Greatness, are you 14 or 15? Please clarify us. Okay, 15 already. Okay, sorry, 15. Okay, greatness is 15. All right, okay. Clarified. What month is your birth? What's your birth month? Are you January? What's your birth month? January, okay, all right. And when was the birthday? We didn't celebrate you. That's wow. What date was your birthday? 14. Where were we? Spec, where were we when Gina was in his birthday? 14. What was 14th of? Yeah, we still have more of it coming in February. 14 is Tuesday. What are we doing on 14th though? Goodness, I didn't celebrate you. Sorry about that. Happy birthday in arrears. Yeah, but that's amazing. So yeah, congratulations to us, right? And now let me tell us, well done means more work. Well done means more work. Yeah, well done means what? Everybody, well done means what? Well done means what? More work. So whenever anybody is telling you well done, congratulations, you be telling yourself, oh boy, what they are saying to me directly is what? More work, more work, more work, more work. Right? So I always say also that getting to the top is just the beginning. Getting to the top, this is the secret that I've learned on how to sustain being at the top. So I tell myself that getting to the top is what? Just the beginning. Getting to the top is just the beginning. This is a secret to sustain and maintain being at the top. Nobody go chance you for that first. You go dey beat your first. Na first, so we call it the 1% of the 1%. That's what you are going to. So our position in this industry is 1% of the 1%. Na there we dey. Na there we dey. Na there we dey. We are the 1% of the 1% traders. Wiser peeps, no worry. Wiser traders, we are just starting. We have not even, we are just scratching, we have not started yet. And every time we get to that our best peak performance, what do we tell ourselves? We are just starting. So always have that mindset of getting to the top is just the beginning. You will never, and it puts you in that humble. You always stay in that humble state. So I have this mantra I say to myself: stay humble, all right? Stay hungry and stay hot. Yeah, there's always more. Stay humble, stay hungry, stay hot. I call it the triple H. Triple H. Someone say triple H, triple H, triple H, triple H, triple H. The triple H, the triple H. Humble, hungry, hot. Humble, hungry, hot. Triple H, triple H, triple H, triple H. Everybody. Let me have your triple H. Let me have your triple H, triple H. I stay humble, I stay hungry, I stay hot. Kai! What am I sharing this night? I don't know. I don't have sharing. I don't know. I stay humble, I stay hungry, I stay hot. I stay humble, I stay hungry, I stay hot. I stay humble, I stay hungry, I stay hot. I stay humble, I stay hungry, I stay hot. Yeah. So exactly. So in the next, ramping up in the next 2 3 minutes. Yes, I stay humble, I stay hungry, I stay hot. Always. So a reminder, I want us to watch that economics assignment I gave us. So in from February, now let me give us oh, a lot of things just coming to my head. last tip to give you guys, okay? As a retail trader, it is 80% technical and 20% fundamental. All right, as a retail trader, your full focus is on technicals, because retail traders, we don't have, truth be told, you need fundamentals, but your focus should not be totally on fundamentals, it's on technicals, right? But when you now become an institutional trader, it is now 80% fundamental and 20% technical. So have that in your notes. As retail traders, as a retail trader, that is the balance, okay, in your journey. Because definitely we will not be retail trader for forever. Why? Because our funds will be entering the hundreds of millions and billions of dollars. So in that case, we can't be, automatically we won't be retail traders, because we can't be trading hundreds of millions and still depending on technical for our our informed decisions. You call it work. Do you get the point now? So as a retail trader, okay, it is 80% technical, all right, then 20% fundamental. So you can have more edge, just to flesh up your edge of fundamentals, all right? Fundamental analysis, just 20%. Okay. But when you now enter the institutional trading, as a trader, you're not trading like an institution, you're not trading funds of hundreds of millions and billions of dollars. They no born you well. It's not your favor look up that you're relying on. Who agrees with me? At that point in time, you will not be relying on fair value gap. Just imagine Dangote now or Elon Musk. Wetin concern fair value gap? He's working with economy, he's working with reports, he's working with confirm order flow. So at that point, what drives your decision is not fundamentals, not technicals. Yeah. So those are the things I want to share with us. Right. 20% technicals. Yeah. Yeah. Exactly. The money becomes too chat to rely on Chapter and alone. They don't born you there. Eh? Never look up. You go come up, because even you alone self, you as a, you become a market mover. A trader or an institution can destroy that favor look up. Hope you know that what moves the market, they are drive. We call them market drivers. They are money market movers that will destroy that your demand and supply zone that your candlestick is showing you. All right. So what will drive your decision then is going to be fundamentals purely, just a little of technicals. So, but now let's enjoy our technical. Let's enjoy it well. Let's enjoy it well. Now, enjoy your technical as well. Full chest. So what I'm saying this is that economics assignment will build the foundation for you. I love the way the guy explained it. Very, very simplified, right? Very, very simplified. And he broke it down what we need for fundamentals. So from there, we build up our knowledge on fundamentals and we take it up from there. I'm signing up for other mentorship on fundamentals this year. At HFM, as a broker, they deal more on fundamentals. So they have a master class on fundamentals. So I'll be enrolling for HFM's master class on fundamentals and a little more other mentors that deal fundamentals. So this year, so my goal this year personally is to get rich in knowledge. All right. So beyond just making money, making the money to get rich in knowledge. That's the goal. Okay. To get rich in knowledge, in forest knowledge, rich in knowledge. That's my one of my that's my goal to get rich in the money is just like I said on my status. The money you're looking for is in the mastery of the skill. The money you're looking for is in the mastery of the skill. When you know your onions, you eat a suya. When you know your onions, you do what? You eat your suya, right? When you know your onions, you eat your suya. Yeah. When you know your onions, you eat your suya. Okay, great. So I think that's all for tonight. So tomorrow again we converge. Okay. I think YouTube is fine now. You can use YouTube, right? You can use YouTube. YouTube is cool. Let's just use YouTube and just yeah. Let's see what our boss is doing. I think YouTube is fine. We can use YouTube. So let me see what Daily Candle is even doing. You can see how Daily Candle has just waked up. It don't carry and go up. Weak. Pew. Send. All right. Although what I'm seeing here on daily time frame, you can see that now if you are doing your overall external, let's do our external impulse and correction before we go. All right. Look at it. Very clear. Externally, what do we have? This is our impulse, right? So now in this correction now took out this impulse to be a what change of character. Okay. Now until we broke we break out of this guy, we are most likely to have what a drop, most likely. So that means what we now have here is that we have a new impulse, because for you to break out of this, for you to break out of this according to structure, it means it has given you an external impulse. Is that clear now? Right? So this is what impulse externally, right? After impulse, what do you expect? External correction. After that, external impulse. Do you see now? So this is an X from this wave external, right? Everything happening here is now what? Impulse, correction, impulse. Do you see that now? That's what I'm talking about. So internally, look at it now. Okay, this is the internal trend, right? Internal structure in this box. Inside the box, you can see that we are having internal impulse, correction, and impulse. So what are we expecting next? Correction. That's why I said that we are most likely to see have a drop. But let's see. Let's see how it goes. Is that clear? What I just said now, is it clear? Is this very, very clear? Because this has respected the daily order block above the fair value gap. So this is our right. This is a fair value gap here. Now in this case, now look at it now. So why did this other block? Why was this other block okay? Um, validated after breaking out of this guy, because there was no fair value gap until we got here. There was no fair value gap at this particular place here. So in this case now we had okay, we have a fair value gap here. True, we have fair value gap here. and at the same time we had it at, so this is like a BB plus fair value gap. Yeah, it got respected, yes or yes? It got respected here, right? And profit was taken at the demand zone. You can see now, it got respected and we had profit taking here, right? But because we still had to respect the premium, because price is price, you can't be correct 100%. But at least this was validated. We had the breaker block plus what, fair value gap, which was respected, and it sold before it now took out this into this again. So currently we are in this daily order block, right? Valid sell, valid sell. So what we should be expecting here more of is sell than buys, but market is the market. So until we see that price breaks out of this guy, right, then we have our buy bias. But until then, we are sell biased. Do we see now? Is that clear? We are simply just following structure. Okay, we are simply following structure until we have this guy broken out. Okay, impulse, correction, impulse. Until we see a breakout, a retest, then our buy continues. So of course, we can catch the internal impulse and correction. Can you see now? Internal impulse and correction, external impulse and correction, internal impulse and correction, external impulse and correction. So the same thing that happened on daily here. See, the same thing that happened on daily here. What happened on daily? He broke out of this higher low chain of character and pulled back, right? Now on 1 hour, we are seeing the same thing again happen on 1 hour. When I say price is fractal, that's what I mean. Look at the same thing happening here too. What do we see here? Price is breaking out of this words of this. Look at, it's taking out this as character change. Can you see the same thing that happened on daily? The same nature, and what is now pulling back into the premium again. The same thing. So what do we have here now? We have impulse. We have impulse. Sorry, I want to use a parts. We had you have impulse now and trying to what give us a what correction, external correction, then impulse again, or until I see that price will now break this guy out. Then we are ready to continue buying. Until then, we are in an internal correction move. Is that clear? Is our guide. Okay? Everything here is internal until it breaks out. See, everything here is what's internal until it breaks out. Okay? All right. So let's just watch out for our internal, external corrective move and impulsive move. Right. And we are good to go. 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 Now, funny enough, why I was not surprised about this buy, because we have our internal too. Look at this, the same thing. All right. What else do you expect? This is what impulse correction, impulse correction, impulse. Same application because we are in an internal, so impulse correction, impulse correction, impulse. We continue that way until we see just like that. So the mindset, very powerful mindset, right? Powerful mindset, powerful mindset. Okay, guys. So I think we are done for today. We are good. 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 Right. So I think we don't have any questions, right? No questions, no question, no question, no question, no question, right? So I'll send this link to the group as a recording. Just joining in. Welcome, sir. It does you watch the watch it from the beginning. All right. Of course, of course, of course. Yeah. We had to improvise to use something that you can yeah. Right, right. I wish I can recap, but I can't. I have to rest and wake up for 2 a.m. prime time. I go straight 2 a.m. Melkis, wake me up by 2 a.m. Please. Please wake me up. We have to look at what God will do around at 2 a.m. because God is promising some moves. I'm sensing some moves around that 2 a.m. God go move that 2 a.m. All right, so let me just take this time to rest. And I'll be out by God's grace, I'll be out active throughout Asian section. Let's see how we can utilize the movement. Right, guys. So thank you for joining. We can't get that 17 now. Hey. All right. So yeah, I'll stream now. Right? No question. No question. No question. Yeah. No question. Right? I'm free to go. I'm free to go. Yeah, GG. Yeah, 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 yeah. Maybe we analyze GG tomorrow. Yeah. All right. Thank you so much. Good night. Have a blessed night rest. God bless you all. Bye.